So if it says it's showtime, it's showtime. Ladies and gentlemen, decorum, please. Yes, we sold Starbucks. I'm out of it. It's done. It's gone. I may buy back in one day. Oh, hold on just a second. I have something in the biz that we call a key light that I had to turn on that I forgot to turn on. So I turned it on. And now the forgetting has been forgotten, but I'm here with you. You're not forgotten. Wow. Well, what a week. I mean, where do we start? Yeah, I sold Starbucks. I don't know if it's that big of a deal. It's not earth shattering. 80 shares out of what do they have? 1.14 billion shares outstanding or something. So I'm pretty sure it's not going to move the market on Starbucks. And hey, anybody listening, let me know if you can hear the cicadas. I got a couple windows open there, and here in the Chicago Midwest region, we got cicadas, and these dang things are loud. So yeah, keep no more Starbucks, Pat, right? Here we go. Oh, I do want to show you guys one thing really quick. I meant to do this last week. But I was looking through stock. I'm always looking at ideas and things to buy. And I want you guys to look at this company. Feel free to look at it if you want to. But as soon as I figure out where my button to share is, did they change it? Oh, here we go. Yeah, so StreamYard sometimes changes things, but this is what I wanted to show you guys. If you want to talk about a company that, we talk about synergies, like things that are supposed to complement each other. I don't know if you have ever heard of Chemed Corporation, ticker CHE, but I was reading through, I had to double read it because what Chemed does, right? It says healthcare services. Okay. So Chemed provides hospice and palliative care services to patients through a network of physicians, registered nurses, home health aides, social workers, clergy, and volunteers primarily in the U.S., right? So hospice, very, very sad time. My grandfather had hospice. It's when people are at the end of their lives and you manage them, on their way out. But then the company also operates through Vitas and Roto-Rooter segments. So they offer plumbing, drain cleaning, excavation, water restoration. I was like, wait, what? So yeah, right there. They do medical services to patients as well as spiritual and emotional counseling. I was just like, wait, palliative care and Roto-Rooter, hospice and Roto-Rooter. I was like, man, that is just a bizarre combination if you ask me, but okay. I guess that's they acquire companies and those are the two biggest ones. I looked at it briefly, but they got some decent dividend growth going on. And yeah, but it's just I don't know, right? Maybe those are, you talk about things that companies or the world is always going to need. We're always going to have people dying, and I guess we're always going to have clogged toilets. So but anyway, yeah, they look okay. Not too bad. Nothing really knocked my socks off. No net debt, a lot of interest coverage. So, I mean, it's just okay, but it's something that to put on your watch list and look at, see if Chemed might be right for you. Talk to your spouse. And Janice, yeah, you know what? I think Starbucks will turn it around, but when? How much time? We talk about opportunity cost. While I'm waiting for the turnaround, my money could be in something else that could have a potential bigger growth trajectory or component to it. But yeah, Chris, you told me. I think a lot of you responded because I put it in the newsletter too, because I was kind of behind the eight ball. I was away for a week. I was away for work all week. We'll try that again. Down in Lincoln, Illinois, small town at a FedEx facility, ticker FDX, by the way, shout out if you own FedEx. And they're still running. They still had, cross dock trucks pull in, unload something. It sits on the dock then, and they put it on another truck and that one goes somewhere else. But yeah, I was kind of pressed for time because I got back Friday, went to see Ghost. And stupid Ticketmaster had an issue. We bought the tickets on Game Time on our way to the show because they were cheaper. So we couldn't see that. And then I worked today. So yesterday morning was my day to record, edit. I talked with another gentleman, Mo from Blossom. Shout out. Anyway, back to what you guys are saying. Enough about me. I want to make it about you and hear what you guys are buying. Any big wins? Any new milestones hit? Please share it, and I'll clickety click your name and put it up on the screen. So your words will go out to everybody that is watching. Boy, it's real easy to tongue tie yourself when you're just flying by the seat of your pants. How low would Starbucks have to go to buy it back? I think in the 60s, I might. I was talking to Shamir in email and mentioned like Nexstar, because I got really familiar with Nexstar's price movements, and now watch it not happen. But for the last almost 5 years, they've swung between the mid to high 140s and the mid 80s. Yes, they'll go a shade above and below that, but it's been holding true now. They hit 190 and they're in the mid 180s. So same thing. If Starbucks goes into the 60s, I could see adding some for I guess a swing, because I'm pretty sure they'd go back up. Same thing for Nexstar. But yeah, so that's it, Eddie. I would say, but then again, we'll have to see what the market's doing. Is the entire market down? Is Costco falling hard, or TJX, which TJ Maxx? Those are two of at the tippy top of my watch list. As I was telling my wife that as we're waiting outside Wingstop, ticker WING, which is also on my watch list. First time I ever had Wingstop. And I told her, I was like, Costco and TJ Maxx, right? It's like that treasure hunt that everybody wants. And sometimes you might just have to pay up for that quality. So, and then give me any ideas here. I'll throw it down on the paper and we'll look up what you're looking into. Tony said selling Starbucks. Now you got to let Nike float off in the sunset. New Balance, dude. Funny you should say that, Tony, because after I sold Starbucks, I had 105 shares of Nike, and I would like to start selling covered calls on those 100 shares. So I sold 5 shares to get down to 100, with the thought that if they got called away somewhere around $80, I wouldn't feel that bad about it, but I've been reading more on the fashion industry and investing in fashion. And, I was even talking with Brian Bollinger, and he agreed. He says that fashion is a really tough investment to do because trends can change so quickly. And, it's hard for me to imagine a world without Nike being the global dominant brand. But we're seeing shots taken at them, and they've sustained some damage. So it could happen, and it's the opportunity cost. I will tell you this, Tony. If and when Costco drops to my buy range, which I'm being very stubborn, waiting for 850 and lower. If it gets there, then I would easily have no problem selling my 10 shares of McDonald's, 10 shares of Lockheed. It's not big, right? It's just the overflow account this is in. Nike, and consolidating those all into either Costco and or TJ Maxx, which I think they own. TJX, they own. I don't think they own Marshalls, but anyway, they have a few brands that we know, and they're a very solid company. Well, Billy, it's morning for you, but it's evening for Billy's over in Thailand. If you guys don't know. Yeah, why keep a stock you're not excited about? I guess so. Sorry. Yeah, Pat, just not in portfolio. Yeah. I agree. Unless it's making you lots of money, I think it'd be okay if it keeps going up and to the right and it's making you tons of money and you're not excited about it. That might be okay. Actually, the ETFs are like that. VTI is really boring. No, it's not that boring, right? That just keeps going up. But hi, Chris. I don't think I've seen you around here before, so I appreciate that. Thank you. And thank you so very much, ladies and gentlemen. Appreciate that. Don't you want to say hello? Why? I don't care. It's my show. I can do whatever the hell I want to do. I don't care. I could.
Am I in?
Somebody brought me tea. Yes. Thank you so very much. My wife. And then my cat followed her down. Okay. Uh, Craig, what's going on, man? I don't get on X that much anymore, dude. It's just, my Instagram got hacked and I just let that go. It's I think you have to pick your platforms, and for me it's just I've just been comfortable with Blossom. Although I have been seeing way too much about MSTY, ULTY, all the yield max, these high income funds, but oh, I did have something to say. I didn't it was a GE video I did, and I'm sorry if you're watching. I didn't put your comment up, but um, a couple weeks ago, somebody responded and said, "Hey, I essentially told what a reverse split was. If you don't know, a reverse split is when a lot of exchanges have a minimum price requirement for the stock. So they want to keep penny stocks off the exchanges. And some are 10, some are a buck. I don't remember what GE was at, but I think it was maybe on NASDAQ, and that they might have a $10 minimum, $5 minimum, whatever it was. So GE had been falling and falling and falling, and they were facing that. So it's been my experience that companies, when they do a reverse split, so remember, nothing changes with the company, but because the stock price was low, so I don't know, say it was, I'm very bad at, I'm mathematically challenged, okay? If the stock was, I don't know, $1 a share, and they did a 1-for-10 reverse split. So they would take your one share. Am I doing that right? And give you 10. No, I did that. I did that backwards. They would, because it happened to me with Aurora Cannabis. So if they did a 10 for 1, they will take your 10, every 10 shares and give you 1. So if it was a buck a share and they do a 10 for 1 reverse split, then you would have 10 shares. No, god dang it. You would have 1 share at $10. Just know this. Yes, the math is a little fuzzy, but it's a way for a company to make the stock price higher without changing anything fundamentally about the business. It is the exact opposite of a split, which is what very healthy companies do when their stock gets very expensive and they want to make it seem cheaper. They will take all the shares back and give you many more shares because then the price will look cheaper. So anyway, I said I'm staying away from GE. It's been my experience that reverse stock splits are a bad thing. It's for companies in trouble. And it has been the one unicorn where a reverse split has phenomenally worked out. And the commenter said, can't you admit why don't you admit when you're wrong? Make a video saying you were wrong. And I'm like, dude, I say I'm wrong all the time. I don't watch, keep track of every single video I did. So anyway, I don't know how we got there, but I told him I was going to start it and say I was wrong. GE has just been wonderful, but with the caveat, I did say that I won't be investing, but for all of you who are, I hope that you make lots of money. So I guess that's my way of saying that. Good. Yeah, Janice, I asked about the cicadas. So, dude, look at all you guys are here. Nobody, what are y'all bored on a Sunday night? Jeremy. By the way, Jeremy from Dividend Stockpile. Check that out. All right. Yeah, if you just tuned in, we talked about Chemed Group or Corporation, ticker CHE. They own a hospice. So they do hospice and Roto-Rooter, which is just crazy. Yeah, I can't see your guys' comments, crowns and all that. I do when I go on Kevin's and other ones. Matt, thank you. Pivot, clean your drain while you're in hospice. Hey, Janice, I had to read that. I thought it was a mistake. I'm like, what? They do hospice and Roto-Rooter? So, but it's just their two divisions and weird one. But hey, there you go. If you ever wanted to own Roto-Rooter, you would buy Chemed Corp, ticker CHE. Thank you, Matt. Weekend was busy but good. Oh, for sure, dude. Yeah, Gabe, we'll look at it. Yeah, we'll warm up a little bit more. And then cake for cake for Gabe. Yes, I do. I'm hip with it. I'm hip. I'm with it. The cake. I know what the cake is. What all these kids talk about with cake. Dude, Josh, what's up, man? Yeah, you got some funny posts. What was that movie? Put it in the comment. He replied to me saying that, and I get this from Warren Buffett, but I paraphrased it without crediting Warren, but it's stock knowledge, is that the only time you should really worry about the stock market going down is if you're a seller, because whether you're buying, stocks, stakes, or stamps, you want prices lower. And especially if you can buy ge- income generating assets cheaper, like that's a good thing. So unless you are selling stocks to bring money in to live, you shouldn't worry about it. It's just a great time um, to buy more. I love it too, Russell. Okay. I think my grandma used to call me Russell more often than she would call me Russ, but that's cool. That's cool. Thor, dude, what a name. Talking about names. Ryan shared WD-40, didn't he? Oh boy, Patel, you're looking at UNH. Man, I'm just staying away, but it's going to reach a point where it's going to be. I'm not a fan of the company, and we've talked about this before, but and what did their CFO left, right? Did he get kicked out? I was so busy this week. I barely read um that news blurb, but it just goes to show that with UNH, did I say ELV? I don't know. UNH, um we don't know. We don't know. And I've gotten burned catching falling knives before. So that's why I said, you know what? Good luck to everybody. I hope that I'm wrong, but I'm sitting out. I'm going to watch on the sidelines with my popcorn. And yeah. Hey, Kevin, what's up, man? Down there in Lakeland, Florida. Too hot for me. Isn't this crazy? Look how cool that we go from Florida to Seattle all watching. And then we have Sam sometimes checks in from New Zealand or Australia, I think. David, nice. You bought Elevance Healthcare. I think I've read that they're a little bit in a better position than UNH. So if you did want to get into that area, it might be, and everyone's going to chase that because it's so hard, right? We look at the price of what UNH was when it was $500 a share not that long ago. And I even do it. I'm like, dang, I'm like 240. It could go back up there, but it could not ever again. Okay, so William, you're in the ground zero for Starbucks, but yeah, it's too high. I've heard that from a lot of people. I know my kids had gift cards. We went to Panera Bread, and I saw they have that sip, right? For a low fee. I didn't check out what it was, but well, and then how do I know it's low? I would just assume it is. But for a flat fee, you can go to Panera and get every day, I guess. It's unlimited drinks and coffee for the whole month. Oh, Kevin, you did. You made the move and bought ConAgra, huh? What pushed you over the edge? What made you do it? Yeah, Jeremy, dude. If you guys don't follow Jeremy's YouTube channel, I highly recommend it. And quality, it's a requirement. I've done that before, and you know as well as I do that quality can stumble and it can erode. But if we're playing a game of averages, it just gives you a better chance. And kind of like sports psychology. I was listening to a Wall Street Journal podcast while I was working, and they had on the CIO, I think, of T. Rowe Price, and he likened decision making to sports psychology, and then explained it, not using sports. Now that I come to think of it, but it made sense. He said if he's out, drinks a whole bunch of wine, and drives home, it had a good outcome, but the decision was a horrible one. But if you took an Uber, it could get into a car wreck. And if it did, the outcome was bad, but the decision was really good. So the whole thought is you want to try to just make the good decisions, and every good decision won't have a good outcome. It's not equal, right? But more often than not, if you consistently make those good decisions, it's going to turn out better. And we see it with, I think, with a lot of these people chasing yields with some of the yield max covered call ETFs. Personally, not for me. I think it's a bad decision to buy them if you are trying to build generational wealth or accumulate wealth. If you're not worried about if you need the income and you're not worried about the NAV slowly eroding, the net asset value, okay. But yeah, Jeremy, with that being said, I think buying quality is, yeah, I think it's a requirement. And right, people have said, don't confuse brain, I don't know how to go, brains in a bull market, something like that. No kidding. Interesting. So the Dutch bros, yeah, I owned them once in a time. I swung a few shares, $20 to like 30. I should have held them, should have bought more. That's interesting, Josh, that you've been trading or trimming Nvidia. And you know what, man? I did also hear that if you look at the 30-year chart of the S&P 500's net income as a whole, it's continually getting higher, and it's higher than it's ever been, because some of these businesses like Nvidia can be way more profitable than oil companies and railroad companies were back in the day. So, and then some of the Tron companies, I think that was in the 60s and 70s. Somebody let me know that. I think it was, the joke was, if a company added Tron to their name, like electronics, anything that had to have Tron in it, TRON, then it would do well. But, I know some people say you never go broke locking in profits, but man, sometimes those winners can just keep on running. So we don't know what's going to happen. Nick buying 30 shares of Novo Nordisk. They've had their problems, but I haven't really looked at them that much. And I know they had, a weight loss drug they had to pull? Or am I thinking of something else? Belay my last on that. I think I'm confusing another company. It's gonna, Josh, behavioral finance if possible. I don't know, dude. I guess in a way we're talking about it, but it's like, can you just give a quick 35-minute dissertation on behavioral finance, please? Thank you. Yeah, I don't, I guess exactly what do you want to know, Josh? All right. There we go. I was right. TJ Maxx owns Marshalls and Home Goods. Very solid. Very solid. Yeah, we can look at that, Craig. So, we'll look at the fundamentals, but sometimes, it's the fundamentals don't tell you everything. Sorry, it just popped in my head that I tell my daughter, you should try to say, less, way less. And I just caught myself doing it. Told her, take a breath, pause. You'll sound much smarter and educated if you do that. You don't use those filler words all the time, because when you listen to somebody like Charlie Munger speak or Marilyn Manson, they don't really say and, but, I'm sure they say but. Good. Craig, I'll look at Triple N, and I've never dug deep into that company, so we can just look at the fundamentals on them. Costco did change where members. I'm an executive member, baby, so I don't know why I would need to get in that early, but did it again. All right, I'm almost getting caught up to you guys here. I didn't see my thoughts about Blossom. I didn't know if somebody else had commented on it, but I know what I was saying. So, and this is the problem when you do this, you make a comment and then somebody responds, and I get it freaking 10 minutes later. So, good point, Tony. And I'm really hoping for a pullback. Steve, what do you mean the Blossom video on MicroStrategy? Maybe I missed that one. Did Blossom put it out? Was it on YouTube? I don't know if I saw that. And I think that's a really dangerous game, because MSTY is tied to MicroStrategy's performance, which is tied to Bitcoin. And if Bitcoin gets crushed for whatever reason, I don't know if it will, because Michael Saylor is he's essentially leveraging his bet on Bitcoin, right? He's borrowing money, he's issuing shares, and he's buying Bitcoin with it. So I think that's a really dangerous game. Hey, so you got to, I guess you got to worry that you got to hope that Bitcoin just stays where it is. That's your bet. And, said it again. Good for him. Good for them. If people buy it, I'm not going to buy it. The kids love Dutch Bros. I've never had it. I'm not right? Look at me. Look at me go. I'm a tea guy, right? I loved it in England. GEV. Jeremy, what's is look at that real quick. John, just by cost. Easier said than done, right? But honestly, if the worry with that is at the higher valuation, there's not as much of an opportunity or a chance to make as much money. It needs to keep going up, which it has been, and I've been really wrong on Costco. So, John, yeah, man, I'm definitely considering it. I keep thinking about it, but I don't know. Are we to a point where valuation for some of these companies doesn't really matter? I mean, it has to matter. Patel, we could look at UPS real quick. I don't know. I wouldn't think so, but I haven't looked at their fundamentals in just a minute. Oh, accepted with Lewis Black. Okay, thanks. Race. Fwank owns F1, but Race is Ferrari, yeah. QC, I'm never buying a Ferrari. I don't know how many of you guys are, but I guess there's enough people in the world that will. Yeah, you guys share your thoughts with Triple N. We'll look at it in a minute here because I'm about caught up, and we'll do the news and then this guy. What's WY? Is that Weyerhaeuser? That's my guess if it is. So yeah, Josh, real quick, man. We'll look that up. I'm got a bit of a list here. So yeah, Tony, that's one of the problems. That's one of the problems that we have to well, I don't know about a problem. It's a cost, right? Labor is a cost of the business. And when everybody wants more money, I want more money, but it is a cost to the business. All right, we're going to do news. Buzz, the list is growing. Before I jump over, when I want to look at these stocks for you guys, but I also don't want to spend like the whole rest of the show just looking at stocks. So, I use Simply Safe Dividends. And real quick, somebody throw it in there. What do you think? I mean, is it a good pace that I do it? I try and go a little bit quick. And I always say that you guys can pause the video if you want to look, because Simply Safe is nice. It shows that 10 years worth of data, and you can see a recent trend. So Warren had talked about looking at least 10 years worth of data. So that's, what's up, Mark? I say it like that. I don't know. Mark wants Vernova. All right, here we go. We'll do some news and then look at a couple of these. Hopefully quick for you guys. I know I didn't go away. I just prematurely blacked out your screen because why not? Why not? Where are we on? Okay, so go to the news. And I think there's a lot of news, isn't there? All right. So here we are. News will be quick because a lot of these items, some of them I haven't even heard of, but the PIMCO High Income Fund got an upgrade, which is nice to see because they have a 12% dividend yield. It's a penny stock. Well, it's a fund, right? Jeremy likes these CEFs, I think, closed on funds. Whirlpool, there you go. Cut that dividend Monday, 49%, which they had safe payouts since 1955. So there you go. If the longevity and safety of the business survivability is at risk. That dividend's getting cut. So they reaffirmed their safety score of 40 on safe. Fertilizer and crop company, Corteva, raised that dividend 6%. That's their 5th consecutive year. Union Pacific, this is one I've thought about and I'm looking into. It's intriguing, but we'll see if regulators let it pass and go through. And from what I was reading, some things, there could be a lot of money to make upgrades and join their networks together. It might not be as seamless as I think some people might be thinking, but anyway, they got downgraded to 80 safe. Union Pacific wants to buy Norfolk Southern, which will increase their debt too. Cintas, another solid company, raised their dividend 15%. This is one that's been on my watch list for a while as well. Yeah, Uniform Rental, and they do like mats. Like if you walk into a auto parts store and you see a rug on the ground, look at the rug. It might be a Cintas rug. So they pick those up, clean them. It's uniforms. Mondelez, ticker MDLZ, candies, raised that dividend 6.4%. Are they out? Or no? Yeah, they're toward the lower end of being reasonably valued. And they came from Kraft Heinz, which Berkshire, right? They took an impairment on. They wrote down a big chunk of KHC. So wondering if they'll sell out. Kenvue was spun out of J&J, raised that dividend 1.2%. And that is interesting. I didn't catch this. They have an activist involvement, leadership change, and portfolio review underway. Interesting. Did not know any of that. McKesson, talk about another solid company, right? Rubber gloves, amongst many other things. Another very, very, very solid company. Talk about quality. McKesson raised that dividend 15%. I think we're almost there. Union Pacific, they reaffirmed that score again. A lot of news about that. Clorox, 1.6% token raise. So they've had very slow dividend raises. And Essential, ticker, what is this ticker? WTRG, raised the dividend 5.3%. This is crazy. There's so much. American States Water, 8.3% dividend raise. 98, very safe. And they look like they could be way undervalued. I think I have them on a watch list. And I don't know why they have such a low rating. Oh, here we go. You guys talked about UPS. So Simply Safe reaffirmed the safety score of 50, borderline safe. But the market is telling you, look out with that 7.7% dividend yield. So when you see it that high, way above the 5-year average, the market is saying, hey, danger, Will Robinson. What's that? I guess the danger, Will Robinson. That's apparently if, I'm not on your guys' screen. How about that? That is if Andrew Dice Clay was doing the, I don't remember the robot's name from Lost in Space, but there you go. So, and then Novo Nordisk, they got dividend safety downgraded to 90 safe. And they lowered their guidance for 2025. Oof. Yeah, they are way down there too. So that's an interesting one, though. We can talk about that in a minute. I think this was the last one. Illinois Toolworks raised that dividend 7.3%. They've risen the dividend every year since 1972. All right, so I'm going to try and do this very quickly for you guys without going super in deep. It's nice to go super in deep. Pause these videos. Gabe, Craig, all y'all that brought some of this up. Oh, Cheesecake Factory. I talked about them once. I'm going to see if there's anything. They got dividend safety score downgraded. Oh, because they cut the dividend in COVID times. They raised it and it's flat. Yeah, the dividend's frozen right now. Free cash flow payout ratio has been coming down. That's good to see. Gabe going super fast here. Low single-digit sales growth. Shares outstanding is flat. The sales still keep going up. That's good to see a little bit. Yeah, the margins are okay. ROE is high. That's a good one. But all their other margins are kind of low. And their debt's a little bit high. But they are able to cover the interest on the debt. So, not for me, Gabe. I don't know, maybe you like Cheesecake Factory, and that's why you want it. So if that's, hey, it's your money, man. Do whatever the hell you want. Another REIT. Yeah, Triple N. I think they're in it's what they own. Are they retail also? Yeah, retail REIT. So I think they're very similar to Agree Realty and Realty Income. Somebody correct me if that's not right. But what did their safety score? 80 safe. They look like they could be undervalued. Yeah, slow growth. I'm remembering here. When I look into them, I get the feel of a Realty Income, very similar growth trajectory. Hey, maybe Realty Income can acquire them someday. Wait, before I say that, what's their market cap? 7.9 billion. They might. Who knows? They acquired Spirit Realty, right? Remember that? So, Craig, it looks like, yeah, it could be a good time to buy. But again, I haven't looked at their properties and who their tenants are. I think they're similar. AFFO payout ratio, really low, man. Really low. And it keeps going up and to the right. It's very similar to Realty Income. But yeah, very, very similar. Everything looks very similar. I mean, I almost feel like I'm looking at Realty Income here. Yeah, a very high free cash flow margin. Nice. Yeah, you know what, man? It's just okay. I mean, I guess if Realty Income's not your flavor, you want to go with them, right? How about that for a 3-second look? Is this, GE Vernova? I see what you guys are, heavy electrical equipment. I don't know about them. That's one of they were spun out of the big conglomerate GE, right? All right, I don't think there's, yeah, I don't, this is the first time I've ever looked at this. So free cash flow payout ratio, super, super low, 8%. Love it. Good free cash flow per share. Yeah, this is very solid so far, Jeremy, and whoever else brought it up. Sales growth, high single digits lately. Yeah, it'd be nice to see a longer trajectory on that, but yeah, it looks okay. No net debt. I'd say it's very solid to put on a watch list. And again, you can't let that 656, anybody new watching, $656 a share. Some of you say like, oh my God, it's so expensive, but they have 279 million shares outstanding, which is not a lot. And when you're getting, where's the free cash flow per share? Yeah, $13.10 of free cash flow per share. So that's why some of these get that price. So it's all about the shares outstanding and the profitability. All right, UPS, quick here. I wonder if UPS and FedEx would ever merge, or if 71 billion. I don't know if Amazon would ever buy UPS. I know they broke their agreement or whatever they had with. Yeah, back in January, UPS reduced business with Amazon. So Amazon ditched UPS, right? Yeah, this is probably one that I would be nervous. So right now, did they? No, they still raised it, but it's a token dividend raise. Yeah, I thought it was frozen there for a minute, but they raised it up, well, a penny per share per quarter, 4 cents per year, which is token. That's a token dividend raise. A lot of weakness around this company. Yeah, when you guys see the dividend yield that high, that's an accidentally high dividend yield of 7.76. You got to watch out that it's not intended to be that high. So the market wants higher compensation for the risk of owning UPS, I think is how you look at it. So you're going to, the higher the yield, the higher the risk. That's usually how it is, because if something is super safe, everybody's going to own it. It's a no-brainer, but this is not a no-brainer. So don't buy it just for that dividend. Yeah, free cash flow ratio over 157%. Yuck. So yeah, it's a company in trouble, and it's got a lot of hair on it. It's a big bucket of yuck. It's a hairy bucket of yuck is what it is. Now I need a shirt. It's a hairy bucket of yuck company. Yeah, I'm sure all their margins yucky, compressing. They're still buying back shares. Sales are down, dropping. Yuck. Yeah, it's just not for me. I'd stay away. This looks like trying to catch a falling knife to me. And one more for Josh. This is kind of like record time here. It was Weyerhaeuser. Nice. Real estate, timbers, they do paper. It's paper. That's from Waterworld, right? Kevin Costner jam. Dividend safety score of 70, another very high yield. Don't know why, Josh, but yeah, they earn their income from timber harvesting, land sales, and forest management. I thought they had paper. I thought I saw Weyerhaeuser paper. Yeah, this is a bit yucky. If you're a dividend growth investor, so anytime there's economic turmoil and trouble, there's the GFC in '08, cut the dividend, and then COVID, cut the dividend. So that's interesting. So if we have an economic issue or situation, they're probably going to cut. But yeah, that's crazy. I know their earnings or their AFFO. Oh, wait, are they a REIT? Oh, they are a REIT. Okay, they're a timber REIT. Okay, Josh, that's an interesting wrinkle. Yuck. Yeah, payout. The AFFO ratio is way too high. That's no good, dude. I need to have serious conviction in this company and know very specifically why I was buying it. But from what I've just seeing here, nah, I'd stay away. I don't know if you're chasing that yield, but honestly, I'm to the point now where I'm more at just trying to not lose money and do less dumb stuff than chase yield and big returns. Yeah, interest coverage ratio is low. I'd stay away from it. That's what I would do. But okay. Well, I hope that was quick enough. I mean, because yeah, I don't know. I want to go deep on everything and I want to spend 10 minutes on every comment, but my favorite type of tea. I like black tea. I like vanilla chai tea. For some reason in the winter, I like peppermint tea. Thanks, Janice. And you really can get deep in the weeds and spend 15 minutes on each company, but I mean that would be so boring. But I think it's a happy medium, just going through super quick, vomiting out thoughts. And if anybody's interested, just I don't know how it looks. Just pause the video and you can see all the information there. Novo is the Nike of GLP-1s. Yeah, it could be, man. It could be. It is a little expensive. You know, you can get grandfathered in. So anybody that bought it years ago, they keep you at that rate. So, hey, voice your concerns. Send an email to Brian Bollinger. Tell him what you think. But they do put a lot of work into it. They do give a lot of their, I guess I would say, expert opinions. So I agree, Mark. GE Vernova looked very solid. That is one that's now going to be on my watch list. I'm going to look into it. Do you guys feel the same way? Isn't it just so easy to want to buy all this stuff you see? But then lately, I've been going the opposite way by trying to find too much wrong with every idea. And if you do that, you'll just never buy anything. That's interesting, William, that you share that because it's been, I'm probably thinking a year and a half or more that I looked at Triple N. So I barely remember looking at it. But once I saw that stuff, I remember it came back to me that I did get the feel that I don't think you need to own Realty Income and Agree Realty and Triple N, which I actually own Agree Realty and Realty Income. And you know what? Hot take. I would not feel, I listen to Agree Realty's earnings and dude, just so solid. Let's put it this way. If Agree Realty and fingers crossed drops back into the low 60s, high 50s, I may just dump all Realty Income and put it all into Agree Realty because I am that confident in management and what they're doing, and they're staying in their sandbox. Joey Agree knows what he doesn't want to get into. He knows what he wants, and it's such a well-run company. And if you guys don't know, I pinned it on my channel because shout out to Travis, the dividend collector. He writes on Seeking Alpha, hooked me up with Joey Agree, and Joey agreed to come on to the channel, and we did a little interview. So just a really, really well-run company, but that's my thought on that. So if one day you ever see me sell 100% of Realty Income and then buy a crap ton of Agree Realty, that's why. Boaz, you think Novo is still moving forward with earnings? Nike's earnings are falling plus their margins. Yeah. Nova's reduced earning expectations. It came up on my news, my pop list, my watch list. How could it not? When again, they're facing that struggle, but yeah, I don't know what the future holds for all the GLP-1 drugs. And I think this is what I was reading. I scanned so much. I think I was reading about it on Seeking Alpha, and that's kind of what somebody was saying, is that it's basically Eli. They're really starting to pull away and widen the gap. So I did not know that, Mark. This is very important because I do think nuclear is the future. I lived on the Stennis, which is a nuclear powered aircraft carrier. And it's crazy. That thing, from what they told me, was that it can operate for 10 years without needing refueling. That's lights always on, operating the entire ship, turning the propellers, and it's just nuclear. And I turned out okay, right? I think I'm all right after living on it for a few years. The Triple N is a smaller version of Realty Income. Yeah, and that's another good point. I've always said that, right, Craig, about Agree Realty and Realty Income, is that they always say Agri, that's my accent. Agree Realty is like the younger, sexier, hotter brother that drives a faster car. and Realty Income is more settled down. It's established. It's not really going to be going fast and partying and hitting all the hip parties. So there's a lot of truth in that, Craig. And yes, I do question myself on that, because sometimes I wonder, did I pick up Realty Income because when I was getting into this, that's what everybody was buying and talking about. So I think there's a little bit of truth to that. And that is why I bought with Joey Agree. If you guys ever go on ceobuys.com, I haven't been on that in a minute, but it will show when CEOs buy of their own money, their own stock, not grants, not restricted unit, not options, none of that. It's when they're buying their shares on the open market with their own money. So it's like the ultimate vote of confidence. Is it? Okay. Nice. I didn't know that. It looks solid, man. For a second, when I saw GEV, I thought it was that when people ask me if I would never invest in a certain sector, it is for-profit prisons. I think there's too many people in prison as it is. And without getting political, I can't think of the name of it, but it's similar. There's a G and I think a G and an E in there. It's a REIT and they own private. If anybody can find that, let me know. Am I waiting for a big buy? Dude, we don't know. I would love for August and September it started that way. It's looking good. And yeah, but at the top of my list is Costco, just because, I'm a big fan of Costco. I love shopping at Costco. I think they have such a great model, and it's going to be really, really hard to knock. It could happen. It could happen. Anything can happen, right? Predictions are tough, especially ones about the future. Credit Yogi Berra for that one. What has made me the most money all of these years, ETFs excluded? That would easily I'll show you, Gabe. Here, I will show you because you're so nice to ask, my man. I'll show you. I know I did it again, right? Bing, bidding. I want to put myself on the screen. How about that? Hello. Here, I'll show you, Gabe. Portfolio, my portfolio. This right here is the Schwab portfolios that I share because for those of you on Blossom, it still shows I have Starbucks. They're not my shares, they're my daughter's. So I couldn't on Blossom, I don't see how to toggle off their accounts. So it's doing all of them. But on Simply Safe, I was able to pick. This is just my Schwab account. This is the taxable account, which I call the overflow account. When we have extra cash after paying everything, instead of putting it in the bank, we buy stocks. But we do have an emergency fund and a travel fund. So this is the taxable account, a self-directed IRA, which is not my 401k. It's just in 2020, I took $30,000 and dumped it into a self-directed IRA. And I moved 30,000 from the 401k. It was a non-taxable event. And then the Roth. So this is 3 accounts combined here, but so zoomed in. But Gabe, since you asked, we go to gain or loss. And well, there, interestingly, it wasn't my thought because Soxel, ticker SOXL, which is a triple leveraged daily semiconductor ETF. I bought I keep it on a watch list, but when in April, it dropped to $9.50 a share. I decided to buy it and swing it, and I've just been holding it. But hey, man, it's, at one point I was up almost 200% on it. So, but in reality, I think it is ExxonMobil right here. We're up 142.8%, cost per share average 45. I bought some in the 30s. And eventually, I'm pretty sure I will get all my money back. But dude, almost a 9% yield on cost for ExxonMobil. And even though I haven't been buying and it looks reasonably valued, and I don't know if any of you, Jeremy, if you're still watching, or Craig, any of you guys run into this, but I kind of don't want to buy anymore because it's going to mess up that super low cost per share. I don't want to average up. It's going to ruin that. So I haven't been buying. And then the second one there you see is AbbVie, 126% gain on AbbVie. So those are my 2 triple digits. And then weirdly enough, Main Street Capital, 71%, not including the dividends. If you guys watched the last video, I shared on Main Street what I do the adjusted. So my adjusted cost basis is, I think like $27.04 a share or something like that. But that's it. So technically, Gabe, it is Soxel, but I only bought 10 shares and I had the money to buy 100, and I wish I would have, but I just wanted to play around with it and see what happens. And here I am still holding all these months later. Michael, no worries, man. Good to see you. Always. Would bill monthly, that would be less painful. Yeah, but that's the same thing about when people want monthly paying dividend stocks, right? I mean, who cares if they pay every quarter? Just spread the money around. It's the same difference, right? And I think there was an experiment done on that where they did a drip of monthly paying versus every quarter, and I think it was negligible. I had more money so I could buy everything I need. Don't buy too much, Johan, but start a side hustle, man. Do whatever you can do to improve your skills and get more money. Will you agree Realty's favorite of all the 3? So why do you own all 3, William? If you can share that quickly, I'd love to know. Oh, yeah, Josh. I didn't know what you were getting at, and it takes me a minute to think sometimes about behavioral finance, and I'm sure I've been talking about it, but as far as like wanting a Merriam-Webster dictionary definition of behavioral finance, I guess I can't give that off the top of my head. So Charles wants to know, what's up, Charles? I was going to say Chuck, and then my brain said he might hate being called Chuck. Don't do it. Which is funny because I worked with a guy who went by James, and if you called him Jim or Jimmy, oh, he would get angry. We never found out why, but if you called him Jim, it would just like be immediate. You like, my name is James. Okay. Yeah. Some guys, all right, Jim, sorry. But yeah. So Charles. So ever since then, like Joshua, I wanted to call, I think I called you Josh anyway, but Geo, dude, that's the one. That's the for-profit prison one. I will never invest in that company. Yes, I say that. I realize I do probably through VTI, but I will never directly pick an investment in them. But Charles, I didn't answer. Will Coke's earnings go down if they start using cane sugar? I suppose if more people stop drinking it, we go through these cycles, right? Where we have these health crazes. Everybody's going to stop eating junk food. Everybody's going to get fit. I mean, you're betting against the unhealthy habits of the American consumer, and that's a bet I'm not willing to take. So there may be some choppy sailing for Coke. They may be a little overvalued, but man, it's all if people will pay those prices, and then people might switch to other alternatives. It's the nature of the way things go, right? Although I don't like them being forced to use the cane sugar, I would rather that the free market choose that they should be using cane sugar by not buying something with the high fructose corn syrup in it. I think you're right, Craig. I could see it at $70 again easily. And right, I mean, it's just that's what happens when interest rates go up. You can get risk-free higher yields. So why would you invest in a company where you have that single stock risk? And it's just rates go up. It sucks money away from REITs and anything that pays a healthy dividend because right, yield hungry investors want a safer yield. If you're only worried about yield, why are you going to fart around with a company that could go bankrupt? Anything could, with UNH, right? Anything could happen. Not saying they're going bankrupt, but yeah, you're right. So when the rates start cutting, and if that rate cut in September, I think is now looking more likely because of the bad jobs numbers and the revisions. I think I heard that the jobs numbers are the worst they've been since 2010, not including COVID. So if the market starts getting confident that a rate cut is coming, well, then I think you're right, man. We could start seeing that. Yeah, Visa's a great one if you hold Costco. Hey, Visa and Costco both get my money. The melt up, I saw you mention that, John, and yeah, it could continue melting up. I mean, D's Devs, what's going on? Nice to see you. Prison REITs? No, not for me. I don't know why I made that. There's people walking by in front. Tell them I need an on-air sign. All right, what are we looking at here? Oh, Reese, I've never seen you before, and then you're gonna show up with a it was Fine Young Cannibals, right? No, or was it Wang Chung that sang Wang Chung tonight? Why don't I know that? I'm not gonna get off this until somebody corrects me. Who did sing Wang Chung? I should know that. Reese. Oh yeah. What? Reese. This isn't Reese from the Terminator, is it? It wasn't Fine Young Cannibals, right? It was Wang Chung. Okay. I know I'm losing my mind. All right, a couple more here. Eddie likes RC Cola, which I believe is Keurig Dr. Pepper, right? Ticker KDP. I think they own RC Cola. Yeah, you guys with your Wang Chung. Oh my God. So we got another week here, and I don't know. We don't know what it's going to bring. We don't know what the future is going to bring, but we do know that we love having you here, and I love having you on the show. Oh, wait, what is this? JJN. Josh, I'm not getting off till you tell me what JJN is. I don't think you mean J&J Snack Foods, right? JJF? What is JJN, bro? Hit me. Come on, Josh. Type faster, man. All right, he says it's all good. Taco trade, Tony. We'll talk about that next week. So for all of you, oops, I did it wrong. For all of you, thank you so much for coming on. I give you a nice, crisp salute. And guys, I'm 47. I'm a kid of the 80s. So it was always bittersweet when Pee Wee would leave, but I know he'd be back. I knew he would be back again next week. So I end the show with that. And so long. I'll talk to all you in the next one. You beautiful people.